Hello everyone, this is my third summary video about core content, and this one is about the third episode of month 1, and that is what to focus on right now. Some general notes. Not all large funds are profitable. Just because it has a lot of capital doesn't mean they're profitable. So this means that smart money targets the large funds because they're the only entities with enough liquidity. Smart money offers liquidity at retail traders at deep premium or discount levels, so that means that they offer liquidity in deep overbought or oversold conditions, because the retail traders don't know what premium and discount are. Central banks choose the price of the currencies. They are in full control. This isn't something that will change your trading, but it's just something that's nice to have in the back of your head. Journaling. Journaling is the most important tool in trading, because when you annotate your charts daily and journal them, you will have a lot of data after a while, and then you can look at this data and look for similarities and maybe study them and so on. So data is worth everything. This is also very important to have confidence and trust in your trading, and you never want to marry with the ideas you have on your analysis. You wouldn't have the flexibility to switch gears or go to the sidelines. So this means that, let's say you're bullish on higher time frame, right? But lower time frame is very bearish. Then if you think it's bullish and only bullish, you will start to force to see things that are bullish, right? And this is something I struggle with a lot. So it's best to always look at the markets objectively, right? And admit when you're wrong, when your analysis is wrong, right? Because I like to have certain levels, and I say, yeah, when price trades above or below this level, then my trade idea is invalidated and I'm wrong. I'm just gonna be on the sidelines, or I'm just gonna look for another trade ID. What should I be focused on right now? You have to create daily price action logs. So on the daily chart, you need at least a 9 to 12 month view. On the 4-hour chart, you need at least a 3-month view. On the 1-hour chart, you need at least a 3 weeks view. And on the 50-minute chart, you need at least 3 to 4 days view. So this means when annotating your chart, you have to have at least a certain period on your chart, right? Because then price really tells you a story. Because if you only look at, let's say, on the daily chart at the last 2 months, then you don't, it's hard to see what price is telling you. So it's very important to look at the bigger picture. Resist the urge to forecast price movements right now. So when you're a beginner trader, you want to resist the urge to begin tape reading, right, and looking at the live market. At the beginning of your journey, you really just want to annotate your charts in hindsight, and not creating daily price action logs will significantly slow down and hinder your progress. So when annotating your chart, you want to have at least those 3 things on your chart. First of all, you want to note where price has shown quick movement away from a specific price level. For example, right here, there is a lot of speed. There is also a lot of speed. You can also see here is a lot of speed here as well. But those speed areas have already been mitigated, right? And we also call this speed areas displacement. You also want to note the recent highs and lows that haven't been retested. So here's a high that hasn't been retested. here's a low, and you want to note the areas where price has left clean highs or lows. So you don't know when price will run through them, but you know that price will sooner or later. Because here above clean highs and below clean lows, this isn't very clean, but these are also relative equal lows, there's a lot of liquidity. Here is another chart example, right? Clean highs, speed away, right? Another clean highs, speed away once again. Here is another low, right? So you just want to annotate those things and study them. You also want to annotate and collect data for when the daily high and low of every trading day is made and in what kill zone it formed. So for example, here at Forex, we see that the low of the day or the high of the day is a lot of the time made in London kill zone. And the opposite high of the day or low of the day is usually made in New York session. That is from 8:30 to 11. And you also want to mark out the weekly highs and lows, right? The high of the week and the low of the week, and in what kill zone it was made. So this example is for the indices. We see that the high of the week is made in London lunch kill zone, right, on Tuesday. And here on Thursday we see that the low of the week is made in New York session, right? So this isn't a coincidence that the high of the week is made on a Tuesday and the low of the week is made on a Thursday. Watch my previous video for a more in-depth explanation about this. As you can see right here, low of the week is made in New York session, right, on Monday, and high of the week is made in New York session on Friday. So thank you for watching this video. Don't forget to like the video and subscribe to the channel. And I apologize for my voice because I am a bit sick, so my voice is a bit gone, but thank you for watching.